Greetings and welcome back to the podcast. This episode, we are joined by Mr. Jeff Robson, President and CEO of Vada Capital, an independent, family-backed private equity firm based in Calgary, Alberta, Canada. Mr. Robson is also a board member of the Haskayne Hunter Centre for Entrepreneurship and Innovation, the First Monday Foundation, the Alberta Hockey Foundation, and is also a Robson DNA Centre board advisor, a general manager of the Canadian Professional Rodeo Association, and a founding partner of Creative Destruction Labs, Rockies. Mr. Robson also earned a business management degree from California Polytechnic State University. Among other things, we discuss growing a family office, adventures in rodeo, and how Vada differentiates itself in private equity. This podcast episode is powered by ATB Capital Markets. ATB Capital Markets provides financial solutions and strategic advisory services to help businesses thrive. With a track record of successful deal execution, ATB is a full-service investment dealer with a deep understanding and commitment to the industries it serves. Visit atbcapitalmarkets.com for more information. Well, we're live now, so
Okay.
Good morning, Mr. Jeff Robson. Thank you very much for doing this. I really appreciate your time.
Yeah, thanks, Trevor, for having me.
For the listener, you're the president and CEO of Vada Capital and Goal Line Partners. You're also professional rodeo
Has been.
athlete, I guess you'd say.
Professional rodeo has been.
You coach hockey, so really interesting. But maybe for the listener, what is Vada Capital and Goal Line Partners?
Yeah, so Vada Capital is just a small family office in Calgary. I think that people always ask about the name, where did it come from? So the name Vada was Val and Dave, who were my parents. And I'm obviously, that resonates with family office. And it's certainly, I'm very proud of both of them and what they've accomplished. So
Your mom and dad, and pretty interesting, which we'll get into maybe in a bit.
yeah, sounds good. And then Goal Line is a fractional CFO, been at it for about 2 years now. Really came as a byproduct of people coming to look for money. And really, we saw a need in the marketplace for people looking for forward vision and some help on organizing themselves. And, so we have kind of three main pieces that we really focus on. One is for that person that has some messy books that they maybe need some help organizing and figuring out where they go to next. Two, people looking for capital expansion and how to process that and where to go to from there. And then lastly, we get the odd person that they're interested in possibly selling their business before they go to the brokers and start paying fees. And, is there maybe a cheaper alternative to just maybe help them set the stage for what those financials need to look to before they actually go and approach the brokers. And we work with, obviously, a number of the brokers in the city on the buy and sell side.
Although you have a pretty interesting career through rodeo and hockey, I thought since this is a business and entrepreneurship podcast, we'd focus on Vada and Goal Line. But what is fractional CFO for the listener?
Fractional CFO, there's many times in those small to medium-sized market businesses, people need kind of some of that CFO advice and some help in terms of strategy, organization, banking relationships, covenant monitoring, those types of things that the CFO in a normal business would help you with. But maybe their business wouldn't warrant a full-time CFO. So we make that a much cheaper and more amenable option. I think what kind of sets us aside from all the other fractional CFOs, and there's some amazing ones in the city, but for us, I think having a lens of our whole team looking at every one of the files, and then really our whole thing is we're not scorekeepers like most people do. How much profit did you make? Or we can do that too. And I always say those are the rear view mirror looking people. We want to look through the front windshield. We want to help pave a roadmap for entrepreneurism. How does that look looking through the front windshield, and how far down the road can we help you paint a picture and do it accurately?
And Vada Capital is a private equity investing model?
Yeah, so we make private equity-like investments. We don't raise outside funds. We invest all our own money. And, we have about 18 private investments. 4 or 5 of those are what I would call more active type investments, where we actually help manage those files and are very interactive. And then there's probably 13 or so would be passive investments.
and it's all your money. So you could say that you are aligned with the shareholders.
I am definitely aligned with the shareholders.
How'd you get into investing and why?
Yeah, so I started my working career like most people in Western Canada as let's go experience the oil patch, and so my folks were in the seismic business. I thought, what better way? I was fresh out of university. There was lots of job opportunity in that market. The world was really growing quickly, and it was a pretty boom time here in this country. So I thought, well, why don't I take part of that? Get some bills paid back from my university days, and then figure out kind of what I want to do from there, or what I don't want to do. I think was more of what most of us are trying to figure out is these are the things I'll do, but here's a laundry list of things I don't want to do. So spending cold winters in Zama Lake and some interesting places like that, I quickly figured out those are the things I didn't want to do. Kind of moved into, at that time, the business was growing at a pretty good clip. So got to experience a bunch of different jobs in a bunch of different countries. Really enjoyed that time. Got a really great foothold on my head start in my life. My wife was working. I was working. I had an ability to kind of get ahead, if you will, before we had kids and settled in. And so, yeah, we did that. And then I took a town job and realized, well, guys in the field really do make a lot more money. And, I tried to figure out where I was going to go to from there. Always, I think just from my dad's experience of being such an amazing entrepreneur, I think I always had that fire in my belly of I wanted to do something on my own. So in 2001, I left the service industry, the oil field service industry, and started my own idea around investing. And in 2002, made my first acquisition of a rail car repair business here in the city that was in receivership. And that was a really interesting opportunity. Did a management buyout with the management. So they owned 25%. I leveraged everything in my life and owned about 75% with my dad, partnered with my dad. And then everything just kind of went from there. We ended up selling that business, I think it was 2017, to a strategic out of Montreal. That turned out really well for us. Actually really wasn't in the market to sell that business, but I had two young partners I brought in. One was running the business. One was the financial arm of the business, and two great young guys I thoroughly enjoyed. I think they taught me as much as I taught them at that time around just how to grow, and they were youthful and thoughtful, and so lots of oversight on my part, but still, I loved the direction that was headed. So that really spurred on. In 2008, I'd bought another business very similar in a much different space. Same thing, it was in turmoil, reshaped it, started to grow it at a pretty good clip. I'm not as proud of that one. I like that one. That didn't end as well as I had hoped, but still pretty decent outcome in terms of, where that ended up. I learned a lot of things in business about that one, and then about growing too fast. But yeah, I think it was really set the stage for kind of where we are now. We still have a pipeline facility construction business in our portfolio. Very proud of the guys that run that business for us. And those guys have done a really good job. And I think it was 2018, we did a merger. So we have a little bit bigger geographic reach. But yeah, it's business has been, has made it through COVID, the downturn in the oil pricing, and all those things. And, I think the secret to sauce that we've learned, certainly I've learned in all these industrial and oil field service spaces is no debt, or very limited debt. So, the world, especially private equity, there's always this impetus of lots of leverage and use the bank's money or somebody else's money. And it works good to a point, but, when you hit road bumps, the world doesn't always work out as good in your favor. So I think that was one of the big things that certainly in my career that I've learned. And then, we've just, as the oil fields business softened, there was less opportunities there. So you start branching out. One of our IT providers got hooked up with, he started an idea around password protections and as a SaaS model, and started learning about recurring revenue models. And so we ended up doing really well selling that business. None of the metrics ever made any sense to me, but somebody obviously somewhere along the way thought that was a good business. So yeah, just been involved in a whole bunch of different things in the investing side, and some of them worked out well and some of them worked out absolutely terrible, but there's always it's kind of like hockey. If you're either winning or learning. So business investing is very similar.
If I'm correct, you went to school in California. So when you were done school, you came back to Canada. What brought you back to Canada?
Well, certainly there was a lure of sunshine in California that was hard to leave for sure. But, home is home. I think one thing that I think Western Canadians certainly should be proud of is the amount of opportunity that's here. And there still is opportunity. You got to look in different places and be a little more creative, but I think there's still a ton of opportunity here. And, I think that was the draw for me to come back. And it certainly was a tough decision because I was like, Birkenstocks and shorts all the rest of my life, or winter boots and a toque. So, I think but I'm glad I made that choice. And here we are.
And so your dad was a very successful entrepreneur as well. Maybe for the listener, what did he do? And why was it a success?
Yeah, so my dad was a crazy successful entrepreneur. And
what was his name?
Dave Robson. And I think for the people that would know him and if people that are listening to this podcast, I think what my dad created always was a culture around family winning. People followed him to the depths. He was a man of his word. When he said he was going to do something, he did it. He spoke about that often. He always had these interesting sayings. We all called them Davisms, but in his book that he wrote, there's a ton of them in there. And he started with nothing and grew a business to, business that ultimately sold for an insane number from a standpoint. But
for the listener, so he was the CEO of
Veritas DGC, yeah. And just after his retirement, I think the business sold to the French for I think $2.5 or $3 billion. Like it was, and I think that. Obviously, the company was public at that time, traded on the New York Stock Exchange, so that wasn't privately held money. So, I mean, good for them. But his thing was, you're only as good as your word. There was just so many of the down to earth principles that rural raised, and grew up in Balf, Alberta, which most people wouldn't even know where Balf is. Somewhere between Daysland and Camrose in northeast Alberta, and his fundamentals were strong. He loved his horses. He loved to go outside and work with his hands. He was definitely work all day and come home and work in the evenings, ride his horses, do his thing. Like that was definitely his passion until his health took a turn and it didn't allow that to happen anymore. But he was an interesting guy as he got on in age and as he retired, he had an investment portfolio. Most investment portfolio managers in the city would be interested to follow. He had a morning call every morning at 8:00 with a certain investor group, and they were always, we had money with money managers in different places, and they were always asking, how'd Dave do last month? How'd Dave do last month? And his return on investment was probably on an annualized basis was far exceeded the guys that are supposed to be doing it for a living. And obviously he was only investing his own money, but he took a lot of pride in that and did a lot of research. And he was, on oxygen and scooter bound for a big part of the, last 20 or 25 years of his life. But he made it a mission to be well-read, very well-versed in what's going on, paid a lot of attention to financial metrics around how healthy is their balance sheet, all the fundamentals that you would always look for in a good business, learned lots about the management groups, and it was just a rock solid investor. Like I always marvel that people that did it for a living would call him and ask him, hey, what do you think of this company? So, I think that's a testament to just how passionate he was about learning and his drive. And my dad was he had a home office that was Wi-Fi. He had all the gadgets of things that, although being an electrical engineer by trade, he was always curious about that sort of stuff, but his technology was always certainly leading edge.
So he was a private investor on his own, but maybe long story short, he founded and sold a seismic company.
Yeah.
Long story short.
Yeah. Long story short, that's true. He was always asked to run for Entrepreneur of the Year for Ernst & Young Award. He fought it for years. Finally, we all convinced him that he should do it in early 2000s. I think it was 2002. He won the Prairie region, he won Canada, and then he represented Canada at the Worlds in Monte Carlo, which is a really cool thing to do. And my dad's comment to that was, leading up to that was, everybody that's ever done this has gone broke. So I don't want to be another statistic. And so, it's kind of like putting the name on the side of your building. They always wanted him to put Veritas on the side of his building. He said, I'm never doing that. He says, somebody who does that, they're going broke. So that's just, he never wanted attention. He never wanted the accolades. Although he won, I think, every award. He won an award for the Society of Exploring Geophysicists. So the SCG, he won lots of business awards in the city, Pinnacle Awards. He was honored at the, Calgary for, I think it was I can't remember what they called it, like the Hall of Fame Calgary Award. I don't think too many awards he didn't win, and he's probably very worthy of all those things. Pretty cool guy.
Well, we could probably talk for a long time on that subject, but maybe we'll get into your investing style and some of your investments. If you were to describe your investment style, how would you paint the picture? Is it fast money, patient capital, venture capital, value, momentum? How would you describe it?
Sadly, none of those things. Although all those things, but none of those things. And sometimes I've been right and sometimes I've been wrong, but people. You're investing alongside people. People are what make businesses, not ideas. There can be a mediocre idea, but the people can make a mediocre idea really, really good. And how their drive and passion for bringing that to life can be really amazing. And I think when you're around good people and people that are fun to do business with, it's not hard work. It's really, it's a much different trajectory. I've tried venture capital with fringe people and it's turned out terrible. You lose all your money. I've tried, I've tried all those things you outlined earlier, and it still boils down to people. And I think that's why my passion always, not to go back to hockey, but I think that's why I love coaching youth hockey. Because, it always goes back to people. It's my why. It's how do you help these people understand it's not just a game. There's a bigger picture here, and how do you create tenacity and work ethic and details and team. And I think those are the things that I think really get me excited about the guys that I work with anyway. And if everybody in the team is doing their thing, business is pretty easy.
How do you screen people?
That's a harder one, but I think, you look for the person that's, can be, for me, I'm a pretty candid guy. So I look for people that are very candid, be very honest about what's happening, and people that can self-reflect and say, I've maybe made some decisions in the past that haven't turned out so well. Here's what I think I've learned from those things. Get that good self-reflecting person. And I'm really curious about learning. Those are the people that you want to be associated with. The guy that comes and tells you, or gal that tells you, well, they know everything. They just made a mistake in the past, but they know everything. That's probably not my kind of person. So yeah, I think people that just can be real and honest and figure out if it's not working, how do we fix it, right? And I think there was always my dad had an adage around bad news first always. Tell me the bad news first, and good news we'll deposit in the bank account. We don't even got to talk about it because it's good, right? So if it's bad news and we get it on the table early, we can fix it. So if we hide it and it festers, and that'll be a bigger problem, which will have a long-lasting effect on client relations and other things.
Do you think it takes a split second when you meet someone to determine if they're quality or not, or does it take a while?
I think you get to be a good judge of character after a while, but every once in a while, somebody tricks you, both good or bad. Somebody, maybe a bit shy or introverted, and you don't get a sense of, what they're really capable of until you really start to work with them. And then you go, oh, wow, they're really quite amazing, but they just don't portray it. And then other people portray greatness, and then it's anything but greatness, right? So yeah, I think people make ideas, people make things happen. Ideas don't make ideas happen. People make them happen.
With a pool of capital through the years, you've had options for your money. Have you found it to be lucrative to invest privately on your own versus just a low-cost index fund? Have you found the returns to be above the market, that strategy? How have you thought about that?
Yeah, so I think I play my odds. I try and diversify things a bit. So, you try and play some equities, bonds, private investments, some real estate. You try and ride out, put some in everything that you think can help matter, and then you try and keep the rest dry. Hopefully for a rainy day. You never know when you need it, right? So I think if you have it, the banks want to give it to you. If you don't have it, they won't give it to you. So, I think you got to be really cautious about that. And so having financial flexibility is something I think that having lots of liquidity matters, and then being able to pivot when you need to. And, you're always at a place of strength versus playing defense a bit, right? I think that's where things get into trouble. So yeah, keeping our businesses very under leveraged, and yeah, I think that's been the big key.
Since it's your own money, you can be intellectually honest in terms of returns in your scorecard, but sometimes people aren't. For instance, if you just put your money in an index fund, it's very hard to outperform that.
Yeah, I think too, you have to have a long plan. So if you put your money in a bond fund and you go, oh, well, I want equity-like returns, well, you shouldn't have put it there. You should have put it in equities, or you should have put it in private business that could get you 30-40% return on your money. But those are hard to come by. So, I think you have to be honest with yourself around what you need to try and achieve. And I think that's where people get, they hear about some crazy story, like when the cannabis world went wild. People putting crazy amounts of money in cannabis. I put zero in cannabis. It didn't fit my investment criteria. It didn't fit my social understanding of it and why those metrics would work. And so, I think for me, I try and index each thing that I do differently. So if you put money in a bond fund, I'm expecting 5 to 7%. That's what I expect. And if you get that, if you get 7, you're happy. If you get 8, you're really happy. If you are in equities, you're probably expecting 12 to 17% returns. And so I think if you get that, you should be happy. And so it's when people start thinking there's a fast, something quick that's going to return them a lot of money. Like those are lottery tickets. Those are hard to find, right? Winning the lotto is hard. So I don't think it works that way. I think you have to be patient. You have to be, you have to be prepared to put your boots on every day and go. And that's where the returns come from. They don't come from get rich quick schemes. So.
This podcast episode is sponsored by Conate Water Solutions. Do you need cost-effective water sourcing options to supply your next drilling or completions program? Conate Water Solutions is a specialized hydrogeology company focused on water well drilling, testing, and water management services in Western Canada and Texas. Contact info@conatewater.com or check out conatewater.com for more details. This podcast episode is brought to you by the Canadian Energy Executive Association, or CEA for short. For over 70 years, CEA has been bringing together energy executives, Indigenous leaders, and policymakers to foster collaboration and shape the future of Canada's energy industry through a series of business conferences, exclusive networking events, and community initiatives. CEA provides opportunities to connect, innovate, and drive meaningful progress. Learn more at energyexecs.ca. For example, if you had put your pool of capital into an index fund in 2001 when you started Vada, you would have had a good chunk now.
Yeah.
But you've found it more lucrative to do your own investing?
Yeah, I think it's more lucrative. I think it's more rewarding. I think there's a balance there. I mean, if you put some money in funds, I think you're expecting fund-like returns. I think if you're putting money in private cos, you're expecting bigger returns, but you probably have to wait longer, right? So I think those things don't happen overnight. They're a long, slow process. I mean, when we bought the rail business and rail car repair business in 2002, we sold it 15 years later. That's not a fast one. You have to change culture. You have to change management. You have to change a lot of things to make that business really go. And then it was a lot of industry pushback from customers. Like it's 100 and some year old business. That's an old industry. So when you're trying to change the way that industry is getting run, you're not going to do that overnight. You have to keep reinforcing why it is that you want to change the way that the business is done. And then, some of it is good. My dad always said being in the right time in the right place, and some good luck didn't hurt it either. Right. So having a business that's situated geographically that's hard to duplicate. Like the capital cost of reproducing that facility is crazy. Like, so nobody's just starting one of those tomorrow, on 15 acres in downtown Calgary. So we had some leverage. We had cars from CN and CP both coming from both sides, could feed into our shop. And so all our customers are on either one of those lines. So there's a lot of upside of being in that spot and in that position. And I think it all makes sense. But you gotta have conviction, and you gotta be able to go there every day and do it, right? So nobody does it for you.
So annualized, you found the returns to be higher over that 15-year time horizon when you look back on things than just buying an index fund?
Well, money invested in that, that probably would have got in some neighborhood of a 229% return on our money over that period of time, right? Like, so that'd be pretty hard to duplicate in any index fund.
I see.
It's pretty good returns, and the reward that you get is the people, because you get to work with a ton of great people, and we had an amazing staff there, and they become family. And so selling that business was a tough decision, because you're going, hey, I'm feeding 85 families in Calgary on a regular basis, and doing it well, and they're prospering. So that's a tough decision to sell that, right?
The point is that if you do private investing well, you can earn outsized returns.
You can. You could. Yeah, but you're going to lose some too, right? Like, I've lost some for sure. Mm-hmm. Like, we're talking about the winners. There's been definitely losers, right? So
public markets. You ever think of that?
Yeah. So we have a portfolio of our business, an allocation to the public markets, and it's been performing well. So
I guess the reason I ask is because it's your own money, you can be honest with your returns. And sometimes people managing money maybe don't have the best incentives, or their alignment isn't there with shareholders, but you are.
Yeah. And yeah, I think there's people that do a really, really good job of. We use a group out of Vancouver for most of our equities as part of our portfolio management of our overarching theme. And they invest in things that I probably would never have dreamt of. We use a firm in Calgary to do some oil and gas investing. We obviously want to be supportive of the oil and gas sector. It's obviously the biggest sector here. But having some balance of your money with a group of managers that are thinking about alternatives is actually has been very enlightening and very interesting of the things that they think about. And I'm always shocked at the things they put money into, and they've done me very well. So, yeah.
How do you approach valuation? Do you read annual reports all day long? What do you do?
I let them read the valuation metrics on the public sides. In terms of valuation privately, there's only a handful of ways to do it. It's a multiple of EBITDA. What do you think it is? There's discounted cash flows. There's asset values. But I think you have to pick a strategy in one of those if you're making an investment, and you have to have conviction about what that strategy is. So for us, I would say the bulk of the businesses we bought have been in some sort of turmoil. So there was a guy in town that actually used the word value investor really well. And at first I was put off by it, but the more I thought about it, I thought, he's absolutely right. I am looking for value, and how do I find it? And how do we grow that? Like, how do we take that and really create an unbelievable story out of that? And I think those are hard to find. They're not easy to find. They're quite hard to find. But when you find one every 10 years, you find a real gem. And that's how many things you look at. Like, there's 150 things come through the door every year, and you find one every 8 or 9 or 10 years that you think, wow, this got a niche business. It has an interesting management group, probably undercapitalized at some stage. They got himself in a little bit of trouble. How do we sort this? And then, how do we create excitement around it? So I think that's been the opportunity I see.
As a value investor, the idea is to buy low and sell high, maybe?
Well, yeah, buy low and you don't always get to sell high, but I think that'd be the idea is, create a professionalized business that somebody's really going to want. And, very few times have we actually taken our businesses and put them in the market for sale. There was an adage my dad had. It said, if you ran a really great business, somebody's going to find you. And so I think that's true. It's like, if you drive by the one house that's always painted nice and kept up and looks amazing on your street, you go, man, I wonder if that house is for sale. That's what, that's kind of how our adage was. Let's make sure our house is always in order. If somebody ever wants to come and look. So our financial discipline around how we do our financing and how we do our financials and our packages are just like we're ready for sale at any given time. And so somebody asks for information, they're going to get it right now. And I think people are always shocked about how responsive we are in terms of somebody wants to see something, they can see it and, sign a non-disclosure agreement and get it. And here's what we got.
It's a paradox because the best businesses aren't for sale, but from your perspective, sometimes they come up, maybe a distress event or something along those lines.
Yeah, sometimes there's just situations that happen, and sometimes they're outside of the control of anybody. Like obviously, the oil and gas service sector was under a lot of scrutiny the last few years with COVID and the price of oil, and I think there's not enough bullish people right now on oil and gas services, and you'll see pricing pressure on the producers now from the lack of services. And so, and everybody every once in a while says, well, it's just us getting even for when things go bad or, things are off a bit. But, I think that that's probably not the overarching theme. I don't think anybody's out to get the producers. I mean, we need the producers. Like, the producers are what we do. I mean, they're the ones that drive it, and it's just glad to be appreciated by the producers for the jobs that we do to help them and getting their stuff to market.
The idea is knowing when you're right and the market's wrong, maybe in a undervalued business. How do you think about that? How do you know when there's opportunity in business that the market is left?
Hindsight's 2020. So as you look at cyclical markets, when COVID happened and stock prices dropped and everything was in turmoil, I think all the smartest people in the room were buying, whether it was equities, like these metrics don't make any sense, and that the prices can't stay low forever. I think you have to be a little bit okay with being against the market grain a bit, and that's not for everybody. You got to have some entrepreneurship in your blood, and you got to have some conviction around what it is that's happening. And I think the people who do that have benefited severely from those moves. And, I think it was impressive for me to watch that time of year when you saw Tourmaline and Interplus and all those companies going down and down and down. And yet the reports are coming out that the management groups were buying up stock. And you're like, well, if they're buying stock, I can't be that dumb, right? Like, I have to go and buy stock. I mean, and that's all public information. So if you're paying any attention at all to what's happening in the world, like, it wouldn't take a big, strong investor to go figure that out. And, I think that's when you have to have conviction, like I say, in the market. And so you see the same thing, in the service sector too, as things, start to rebound and things are getting busy, then people become uncapitalized again. Like, they try and get too busy too fast. They won't want to stay in their own lane. They're going to try and get market share when things go nuts instead of just staying the course, right? Like, so that's when things start to happen for us, is banks maybe contact us, say maybe this has got too much leverage. Maybe there's an opportunity here. So
how do you spend your days investing?
Yeah. So, we don't, we look at lots of stuff. I have a group of people that do lots of the first looks for me. My daughter's one of them. I'm super happy to have her as a third generation in our business, and she's waiting to go to law school. So we'll see what happens out of that. But yeah, and she's been looking at him. Obviously I have 5 or 6 other people in our office, and they're all looking at things all the time in terms of, what comes through the door, what's out there. And then, people in the marketplace know me, so that they send it directly to me and say, hey, I think this is something you might be interested in. So it's not interesting for them for whatever reason. So, you get a reputation for that sort of stuff too.
When you were starting, how did you come across deals?
Kicked a lot of tires, took a lot of people for coffee. I hear people, young people especially, saying, geez, the markets are tough for jobs, but you got to get out there and you got to network, and there's a price to pay for that. So you got to figure it out somehow. And if you really want it, and just stay on it. I think it's a path, right? You have to have conviction.
1 or 2 of your best investments you've seen so far?
The rail car business was very good to us. That business was bought by with a little bit of equity that we scraped up, and then took out a sub-debt loan to finish off the balance, and then some good relationship management at a bank, a tier one bank. Yeah, and then just stayed the course. Shrunk the business. Probably the scariest thing of the whole time of that was to shrink the business to figure out what was actually driving the business. That took the longest and the hardest because you're scared to death to shrink the business. But it was something we just had to do at the time because I didn't come from that industry. I knew lots of things, but I didn't know enough about that industry. So I think there was a huge learning gap there. And it was a lot of fun to dive in and try and figure that out. But that investment was, we paid back the sub-debt deal a few years into it and then started to reap the benefits, right? So I don't think we used hardly any debt in that business, like kind of post 3 or 4 years into it until we sold. And so, that was a great place for us to be in that business. And so that was arguably would probably be top one. Top two, there was a password protection business, a SaaS business that we got involved in. And once again, it was a people play. It wasn't an idea play. I didn't know much about the idea, but really liked the entrepreneur, and I liked what his thought process around it was. And yeah, so we ended up being an equity investor in that business, and then also provided some of the debenture financing. So as they were growing, they needed kind of that, they weren't cash flow positive, so they needed more money, and so put that in a debenture form. It converted when we sold. So, that business, just on a rate of return business, that probably was the second best. I think there's some other ones I'm every bit as proud of because that one we didn't have as much a hands-on, but, certainly lots of hands-on from a board perspective. And I was the only non-technical board guy on the board. So I think that was an interesting endeavor. When the offer came, all the technology guys were like, well, let's not sell. And I'm like, no, we really need to revisit this. So I think that was, I think that was a fun experiment, right?
Do you take a portfolio approach or do you concentrate pretty heavily? How do you think about that?
I'm probably far more, the older I get, more portfolio approaches is probably more reasonable. So yeah, I have a mix of some assets in liquid things like equities, bonds, own some real estate, then have some private investments. So I'd say I'd try and manage all those things collectively and just see how they all kind of shape to form a strategy.
The challenges in Western Canada. What has been some challenges you've had investing in private equity through the years? What has made life difficult?
Yeah, challenges are finding good deals. The actual private equity groups, they're bigger and they have a much bigger drive to do transactions. And so one way to combat that is if you can't beat them, you might as well join them. So invest in some of those funds. So we've done some of that so you can participate in some of the bigger deals. And some of those have been unbelievable. In the past year, we've had probably, I'd say, the third best return company that we've ever been involved in sold last year and sold to a public company. And that turned out to be an amazing event for all the shareholders involved. Those are, that's one way of hedging your bet around not being, being able to participate in kind of some of those private equity, truly private equity like deals. And the other challenges are just there's more people in the marketplace. So there's more, I think the term family office has popped up lately way more than it had in the past. When I started, like family offices weren't a thing. Like now there's a family office everywhere and the amount of liquidity that's around is I think higher than it's been in a while. But I think some of us are all pulling back too a little bit going, hey, where is the opportunities now? And so, but I don't see that stopping. I do see it slowing. So the access to capital will be interesting. I think new challenges for us as we go forward will be very interesting. The Canadian dollar slide is really going to put a lot of pressure on us locally, where I think U.S. investors can make bigger investments for 70 cents, 69 cents on the dollar. Like that makes it a lot harder for us to compete. So I think we're going to get some pressure there too.
Do you find it necessary to remind yourself to be patient? Sometimes it's easy to do things. Do you have to sit and wait and screen a lot?
I would say if you ask my staff, I think it's a lot harder for my staff to sit and be patient because they want to do things, and, we feel like if we're not doing something, we're getting left behind or when's he going to fire us all? Or, I think you get that sense every once in a while. I think their ability to sit and be patient, it gets much more challenging. For me, I don't. The taste of making a bad decision and investing in something that doesn't work out, I think far exceeds the patience. And so when you make one, it really hurts and it's your own and it's hard. There's days when you go and you lose a bunch and you go like that sick feeling in your stomach. Like that's the feeling I have when I go home when we lose. Right. So, I don't love it. And I like to win. So I think that's being patient is a key.
This episode is brought to you by Upgrade Labs. Upgrade Labs offers a comprehensive range of cutting-edge performance and recovery services that have been proven to optimize your health in minutes, not hours. Whether it's accelerating muscle mass and bone density or addressing injury and inflammation, start your experience by booking a free cell health analysis at upgradelabs.com/Calgary. This podcast is brought to you by Energy United. Energy United is an organization with a mission to promote practical energy policy across Canada. Energy United is building a community of Canadians that are passionate about Canada's natural gas and oil industry and are willing to take action. Energy United is driving change on issues that matter, all the way from the carbon tax to the emissions cap. Join Energy United to make a difference at energyunited.ca. With the more family offices operating in Calgary, maybe more competitive. So how do you differentiate yourself? How do you get the good deals without giving away your secrets?
Yeah, I don't think it's a secret. I think track record speaks for yourself. Like, people say you'll really appreciate working with Jeff on this, or this is his style. It'll probably fit your style. So people would make a recommendation. I still think those things exist. Those relationships still matter. I also see the idea around co-investing with other family offices. I see that there's a couple, 2 or 3 family offices can get together and do one deal and do a bigger deal. Not just a matter of the governance around that and who controls it and, how do you set that up? I see that is going to be coming on the horizon sooner rather than later, just with the lack of good deal flow. And everybody's going to go through it. Like the new guy is going to come in. I kid Ian about this, actually. Ian Dundas, kid him about that. Like, we got to go do something, right? Like, well, you'll make some mistakes before you figure this out, right? So I love to see his enthusiasm and where he's headed, and it looks awesome for him. I'm super happy for him.
The traditional energy industry is the bedrock of the Calgary / Alberta economy, but tech is becoming more important. Do you see opportunity for tech investing in Calgary?
Yeah, I guess a couple of years ago, the word ecosystem was the one everybody was overusing, I thought. Obviously it's grown, and you'd be crazy to think it hasn't. I see it's grown. I see a lot more tech stuff as it relates to, the drill bit or getting our products to market, or you still see lots of tech as it relates to the oil and gas service sector. So, and I'm invested in some of those things. So I still see that there's, Calgarians are amazing at developing, well, not Calgarians, but, Alberta in general is amazing at developing worldwide technology that gets used everywhere. I think that's, what we've been all about, and it's how we managed to make our products more cleaner, safer, more environmentally friendly. You see that all the time. There's lots of water ideas. There's lots of reusable water ideas. There's every time you turn around, there's something else that we're trying to do better. So the world doesn't frown on what we're trying to do. And frankly, we need oil and gas, and we just need it. Like, our world revolves around it. you want to have heat in your house. That's when it's a little frosty out at the moment if you don't want any heat in your house. So, yeah.
As an investor, the idea is to avoid trends, overpriced assets, but do you see any emerging asset classes in Alberta?
I think the traditional ones will still prevail. I still think that's a very viable option. I think, like I said earlier, I'm still pretty bullish on the oil and gas service sector. I think there's still lots of opportunity in that sector. I see, you call them trends, I call them fads. Everybody's looking for the next thing, and how do I get in and get out and make a ton, right? We saw it in the cannabis world. There was you couldn't have talked about an industry that got overbuilt and oversold and oversubscribed. And I haven't talked to anybody yet that's went, man, I made a mint in that business. Like I lost. They were trying to get me involved in I think it was called Fire and Flower or something at the time. But I'm like, I just don't understand this business. And I got it. I get what it does. I get the whole thing. I don't understand how you make a go of it. But I'm happy for the ones that have. There still is some guys that are still working in the business and making a go of it. Good for them, because I think that's they obviously figured out something nobody else figured out. So I think that's pretty interesting. But there's so many these fad things, and so yeah, it's interesting. Think about from time to time.
A little bit of hockey,
sure.
You're involved at the Edge School. How does community involvement align with your approach to life, and why do you do it?
Yeah, so I think my kids I guess 2 of my 4 kids played hockey, and I got involved in minor hockey, and hockey was a thing that I loved, obviously growing up, and I kind of got to a pass around that 11, 12, 13 years old where do you do rodeo things and horse things, or do you do hockey, right? And my parents said, we can afford to help sponsor one of those, but not both from a time and energy perspective, and probably not so much from a resource perspective. Hockey peg didn't cost that much at the time, but but time, I think time was the animal at that time. So, I was always fascinated with the rodeo world and horses and that stuff. So I put my hockey stuff on hold. And so in terms of how good a hockey player I am, I'm not a very good hockey player, but I would say I'm an absolute student of the game. I probably watch more hockey than I would care to tell you about. I watch probably 2, 3, 4 games a day in various shapes and forms. I spend a lot of time watching it. And I coach, obviously. So the past 4 seasons, I've coached the U15 prep team, boys team at the Edge School. And then this year I'm coaching the U18 female team, which is, I have 3 daughters out of my 4 kids. And so people say, oh, that must be really different coaching girls. I said, well, I have lots of them. So, it doesn't bother me too much, but, yeah, it's been a great to be involved in the program at the school. I love what they stand for. I love how, all my kids graduated from there, and my last one's there now in grade 12. She just committed to St. Mary's University to play volleyball next year. But, I like how they prepare you for university. All my kids really appreciated that. And then it's a great, when you get into the walls of the community there, and, you see kids that are coming back now, like just even for the Christmas break, dub kids that you've coached in the past, and how excited they are to see you and tell you about what's going on in their life and the struggles, and you talk about school. And for me, that's when you made an impact. And they always, even the ones you talk to during the year, my number one question is always, how's school going? And I think that school, people get it wrong. It's a school that does athletics. It's not athletics that does school. So I think that's first and foremost. People do get it wrong. They go there thinking we just want to be this athletic juggernaut. That's not the case. You need to go there to go to school. And, I think, just coming out and figuring out, what's my why. My why is, I love to see the impact you can make on young people. And I think young people these days have a really unique challenge in terms of the things that they get put in front of them, and, screen time with that stuff, and they get sidelined with. So I think athletics really does allow them that regroundingness, if you will. And then how do we help in aiding in that and helping them make good decisions, and then, thinking about school. And yeah, I think it's a great environment, and I every day I get to go and skate there, and I love it, and love to be there and challenge the kids. And yeah, I'm sure they wouldn't all appreciate me, but I think most do.
The idea is to give back to kids, and it's a investment that pays dividends.
Yeah, I think it pays huge dividends in society. And, like I said, when you see those kids, the very first year I coached there, I think 2 of them got drafted into the NHL this past summer. And just seeing that and seeing the joy and the hard work that those kids have put in, and not all of them will get that far, but lots of them will. And it's really, really cool to see, and how they're growing and maturing, and they come back and have adult conversations.
Yeah.
Like, it's actually pretty fun to stand in the foyer the other day, and there's some standing there, and you're just having an adult conversation with a 17-year-old, like, who's just, been living away from home and just came back from, whatever city he's in. And so, yeah, it's pretty cool environment. And then, and just following their careers and sending them notes and seeing how they're doing. I think that, to me, it's just a great event, and yeah, I love it. Yeah.
I think you're also involved with the Creative Destruction Lab?
I was, yeah. So I was an early sponsor of the CDL Rockies.
How did you get involved with that?
Yeah. So Jim DeWald was, and Chen Fong was in my peer group, and he talked about it. He was involved in it when it was started in Toronto, and talked about bringing it here. And, it just sounded like such an amazing opportunity for young entrepreneurs to get a start. And yeah, so it's probably a bit early for me. Like, it's really truly venture pre-seed capital type ideas. I'm probably better suited to more mature businesses. That's probably where I fit better. So I think just recognizing that, and obviously we felt happy to give back to the community and get it started. And, we donated money to the Hunter Center too, at Haskayne School of Business. So, we want to be a part of that. And so, yeah, I think just keep giving back to community. And I think been part of giving back to the Stampede every year. And, my dad, before he passed, donated some money and created the Robson DNA Center, the Cancer Center. So that actually just had its 10th year anniversary, and was at the university the other day and saw the amazing strides they're making in cancer research, and DNA discovery is just mind-boggling what they're working on. But it takes, it's 10 years. Like, it's a long time. Like, in their minds, it's a short time because it's went by really fast. But, the strides that they're making is unbelievable in this community. Like, we're probably the premier cancer center in this country by far. So it's really cool.
And you're also a rodeo athlete.
Well, I has been a rodeo athlete as a youngster growing up on the farm, with horses, cattle, etc. Just always had a passion for the rodeo stuff and horses. And
you blew both your hips out.
Yeah. So, roping was my thing. Obviously I love to rope, and so got lucky enough to paid for my U.S. education on a rodeo scholarship. So that was how I ended up in California, and the coach there was Canadian. So that turned out to be an amazing life expedition. And then, came back and, still really was very passionate about it. And, on and off through work, other times was busier than other times. But sometimes there was a few years I had to take and put it on hiatus while I got some business stuff organized. But yeah, and then in 2014, I just kind of got to the spot where, like, my hips were bothering me so much I just, couldn't really ride and compete at a level that I thought was acceptable anymore. And so in 2015 had bilateral hip surgery, so I had Birmingham's in both my hips, and so I don't make it through too many radar detectors or metal detectors anymore, but that's okay. But quality of life is high, and so, I always thought, if I got that fixed, I'd go back and do some more roping, but so far haven't. So, I've kind of fallen in love with my golf clubs, and I don't have to feed them, and they don't poop on the floor. And, so I put them in the corner, and when I want to go use them, I just grab them and use them. And, so yeah, I've been doing a lot more golfing. And
well, that's an hour, maybe to get to the end. What advice would you give to entrepreneurs looking to partner with a private equity firm like your own? What would you tell them?
Yeah, I think there's pros and cons to everything. when you want to partner with equity players, like, obviously equity people think about returns. I try and focus on the people, focus on the process. And so for me, that's the most important part. And that might sound like a sales pitch, but it's not. It's, lots of firms calculate IRR and those types of things. And my dad made me swear I would never judge our investments by that. And so I don't. I judge by how well it's working, what's working well, what do we like about our relationship, build a relationship, have one so you can talk through things that aren't going so well, put bad news on the table first. And I think just be a good partner, be a good sounding board for your teammates. So I think that's a big thing for me. And then I think on the other side of that, try and find somebody that you feel like is fair when you're out looking for money and you've exhausted opportunity. People tend to take advantage of that. And even though I would call myself a value investor, I try not to take advantage of my partners. I might try and take advantage of the bank. I might try and take advantage of, some other situation, but I definitely don't try and take advantage of my partners, because I said, that taste in your mouth will last a long time. And so those are the people that you need to do lots of the work. And so I think that having that relationship is a big thing. So, don't settle for getting taken advantage of if you don't have to. So.
You're not that old yet, but advice to a 30-year-old Jeff Robson. What would you tell him?
Yeah. Do it again. Do it again. Yeah. It's been a lot of fun. Obviously lots of hard work at certain times of your life, but it's lots of fun, and it should be fun. You should go to work and it should be fun. If you're not enjoying what you're doing every day, do something else, because it's, it goes by too fast. And I've seen, whether it's family, otherwise, health, sudden deaths, things happen. Don't be miserable. Do things that you love and make the most of it.
I really appreciate your time.
Oh, it's amazing to, for you to have me, and appreciate even thinking of me. So,
unless there's anything else you want to add, we can end the formal conversation.
No, that's awesome. Thank you, Trevor.